Welcome to the new program Inside Crypto. This is the first episode celebrating Bitcoin surpassing $100,000. We're separating Inside Crypto, which will now be its own segment. I've decided to record crypto separately for you, and over time there will probably be a bit more cryptocurrencies here than just the two. What is the new Inside Crypto block all about? We'll tell you how we see it through the lens of the hedge fund I manage. I don't know how much our approach aligns with what big American hedge funds are doing. We're a small hedge fund, but I think this perspective might be a bit different from what people in crypto are used to. I've decided to share this because it seems to me that the inefficiency in the crypto market still exists. I see that trading here is different from traditional markets, and with certain mechanisms and how I think I can read what hedge funds are planning, you can predict certain things and see how it all looks from this perspective. I hope this knowledge will be valuable to you. These programs will be very short, I think no more than 5 minutes. This will be a quick overview, and we're starting. For now, it's just the king and queen of crypto, Bitcoin and Ethereum. The first thing we pay attention to is the positions, the liquidation of investors, meaning on the markets, on the exchanges. We have information about where the most liquidations are happening, where the stop-outs are, liquidations related to specific capital, and so on. And we aggregate this data, collecting it in CoinGlass tool, and we really focus on it. Why are we looking at this? Why is this from the perspective of a hedge fund? Because you need to know that when you trade, when small traders trade, it doesn't matter what the liquidity of the market is and how deep it is. But for large hedge funds, it matters how to enter a bigger position, and it's not that simple. Hedge funds are often like a bull in a china shop, and they have to look for that liquidity. And this is something that's often done, and the crypto market is very manipulated in this way. Unlike traditional markets, you have to know that in the traditional market, such as deliberate manipulation of markets, clearing stop losses, deliberate rigging of the market, it's very heavily restricted and monitored by regulatory bodies. We've also had to explain certain things like why we bought something or why we didn't and so on. And in crypto, this doesn't happen, and you often end up in these situations called stop-loss hunting, approaching the right levels. And that actually happened with Bitcoin last week. It was obvious that there had to be an attack on 100,000. Why? Because there were constant liquidations of positions, huge liquidations of positions. It was enough to push the market over 100,000, and more buyers started joining in. So what did the hedge funds do then? Hedge funds flipped their positions to short because with that liquidity, they could play a lot of shorts. They were battling with the buyers, and then to let the market fade out on its own, they allow the market to die down so that the movement kind of fizzles out. And then, of course, we have a reversal. And when do they close those positions on the reversal? Well, at the next stop outs, when the market drops and is thrown out at the next gathering. And last week, those positions were at 101,000 on Bitcoin, and around 94,000 in those regions were the stop outs. And so the market followed, breaking through 100,000, clearing out those stop outs, and then a reversal back down to 94. Well, of course, this isn't a pharmacy. Hedge funds also don't have any super secret knowledge, and they're not the only players in the market. And sometimes you can't reach those levels, and sometimes they overshoot. Some were a bit overshot upwards. The peak wasn't at 101, but at 103. And at the bottom, it's the same. This market dropped a bit deeper than those liquidations. So looking ahead, how does it look now? Well, those liquidations are now up at around 104,000 on Bitcoin, and at the bottom at approximately around 93,000. Here, such ranges of fluctuations could be expected. And it should be noted that after these recent rallies, now there are also quite a few positions at 97,000. So if someone is very bullish, he can jump into longs already at 97,000. I'm not that bullish. I think that now the market, after clearing those 100,000 levels, after a lot of FOMO kicked in for many people, when the market suddenly accelerated, it usually happens that when the market speeds up its gains, it indicates a lot of FOMO, which is a sign of a correction coming. And that's what happened. We had a correction. I think there will be a second wave of this correction down to around 92, maybe 91,000 to clear out all those stop losses here. And only then will the way be open to go higher. And with Ethereum, it's a similar situation. We're approaching 4,000, and I believe that there hasn't been a major clearing of stop losses yet. I think the Ethereum frenzy is still ahead of us, and I expect a breakout above 4,000 where we'll see much greater volatility, and that's when altcoins will wake up, etc. So the question is whether the market will attack 4,000 right away or if it will pull back first. I think that just like Bitcoin, Ethereum will pull back first. It's much harder here. Those liquidation positions are really spread out. Well, this time I would wait a bit for a deeper pullback, and from the 3,500 level, I think there will be an attack on the 4,000 mark, which will then be broken through with a bang. Remember, it's December, the best months for the markets. It's said that Wall Street has already taken over cryptocurrencies since the introduction of ETFs. The inflows into ETFs are extremely significant. The inflows into index ETFs have been huge lately, and there's nothing stopping them from intensifying soon. For crypto ETFs, especially since January is statistically the best month. I mean, actually the first weeks of January, not just January itself, but the first 2 weeks of January are the best periods for indices. I believe that crypto is heading in the direction of what's happening with the indices. And as I said, Wall Street is increasingly taking over crypto. Investors in crypto are just starting to learn that these cycles will soon align with those of the stock market. I think the end of December and the beginning of January will be the best periods for crypto in the coming years. Of course, halvings also have significance, but they need to be played out in a specific way leading up to the next halving. We have plenty of time, so it might not make sense to have these discussions right now. And that's it for this first episode of Inside Crypto. Thank you all very much for your attention. And now every week I invite Tomasz Piwonski, the manager of the Solution One Fund,